Good afternoon and welcome back to the TIP TV Finance Show. I'm delighted to be joined today by my co-host Charlie Gibson and Gerard Kisbey-Green, CEO of Goldplat. Welcome, Gerard.
Thank you very much.
So can you start by giving investors a brief overview of what Goldplat actually does?
Sure. I mean, we're an AIM-listed junior gold producer, but our focus is really on recovery operations. And just to explain it very, very simply, is we don't recover gold from very low grade, very high volume slimes depositions like some companies do. We really recover gold and other metals from byproducts from the primary mining operations. And that's anything from wood chips to carbon fines, grease, mill liners, all that kind of thing. We can take, these issues are normally an environmental problem for the mines. They've got to get rid of them and often pay to get rid of them. We can take them off their hands, extract the metals, give them back metal and or dollars, and we all make money. So a little bit of a green aspect to it, a bit of an environmental aspect to it. And we produce, around about 40,000 ounces of gold a year at the moment. So we're a bona fide gold producer with a 1 million ounce resource. And we also have a producing gold mine in Kenya, which is very small, and we're busy installing a plant now to up the capacity and make profits again from that operation.
Tell us a little bit about that recovery operation, because that's really the core of it, isn't it? And you've got two plants, one in Ghana, one in South Africa.
Yeah.
And when you say you produce about 40,000 ounces a year, what sort of throughput of that material are you talking about? I mean, a lot of people will think in terms of grams per tonne. Do you have a similar sort of figure?
Yeah, so everything is really dependent on the product. And, for example, carbon fines might be hundreds and indeed thousands of grams per tonne. Wood chips would be much, much lower. So you can't equate it to a mining 3 or 4 grams a tonne or 2 grams a tonne kind of thing, because it really is a very, very different business. So we can't really look at it like that. But you're right.
You get material from mining companies.
Correct.
You like the grease, like the pit props, whatever, and then you put it through a process which is actually fairly unique, because it's not that, again, if normally you've got gold in rock, you grind it up, you slosh a bit of cyanide over it and filter it, but that's not really what you do, is it?
Absolutely. So, I mean, we do consider ourselves a niche player, in as much as what we're taking material that most players can't get metal out of, and we can. The equipment we use and our circuits are pretty much like off the shelf. So we have a number of what you've explained as a typical milling leaching circuit, but we also have a lot of other things like spiral plants and incinerators, both rotary kilns and fluidized bed incinerators.
Give a flavour for how they work.
Well, I mean, very, very simply put, you put a product into an incinerator, you burn it up and you get ash, you elute the ash and you get ultimately a doré out of it, and you have the doré refined by a refiner. It can be as simple as that. Some of the stuff, you take wood chips, for example, which are produced mainly by underground mines that have wood support, and we'll wash the wood chips, you extract the gravels from that, and they go into your normal milling circuit, and the wood that's now cleaned will go through your incinerator circuit. So I think where we are a niche and where we've got a competitive advantage is we've got a lot of different circuits of basic equipment, but a lot of different circuits, and most importantly, we've got a team that's been around from 15 to 25 years, and they know how to optimally use those circuits. In other words, a given batch of material, what circuit it should begin in, and then it might be switched to another circuit. And in that way, you get the right mix of products out and at the best kind of profitability.
So I suppose the other thing that relates to that then is that you described yourselves as having a resource, I think,
Yes.
But that presumably is not a conventional resource then in a way that we would ordinarily think of.
No, indeed. I mean, on our mining operation in Kenya, we have a bona fide usual JORC gold resource of 670,000 ounces. And then we have 2 smaller resources in Ghana and Burkina Faso, in aggregate a couple of 100,000 ounces. In South Africa, we've got a different resource where we've got a stock dam, which is our tailings dam. And at the end of last year in December, we declared a JORC resource in that. So we drilled the tailings facility out.
And that's a conventional tailings facility?
It's almost conventional. It's our tailings facility, so we've never called it a final deposition facility. It's been a stock dam, because we know that there's value in there, and we've always planned to recover it.
What grade does that run at?
It's running at about 2 grams a tonne.
Okay.
The recoveries won't be your typical 90+%.
No, but you could get 50, couldn't you? Or?
We're hoping to get close to 50, funnily enough. I think off the bat we'd get about 20, we've declared publicly. But we're doing a lot of work with the university and research to up that. And we think somewhere between 40 and 50% is what we'll get out of it. And we're just busy establishing and securing a final tailings deposition site now, The moment we've got that done, we'll begin to process that dump.
So what are the key things for you? Because I suppose, in the way that a normal company has a normal conventional resource, and you have some of that as well, but actually you can buy in resources. Presumably you have agreements with all of the big mining companies in South Africa. Do you buy their material? Do they give it to you? What's the arrangement?
Yeah, I mean, that's a very important point, and that's one of our key strategies going forward, articulated in our announcement, is sourcing. Because, where a mine would produce gold and whatever tonnage they hoist and process is pretty regular, and it's based on depletion of their given resource. We literally have contracts with, in South Africa, all the major gold producers, in Ghana, all the major gold producers, and then elsewhere in the world with various producers. But it's very much a batch-by-batch thing. You might have a 3-year contract, but it doesn't mean every month you're getting a particular amount of material. So we've got a sourcing team literally going out there all the time to the producers and seeing what's available. And there's a very kind of contracts where sometimes we'll do an outright purchase of material and take the risk of what's in there. But more often than not, we both assay and we agree on how much is in there. And we get the material, and when we get paid for it, we pay them back, either in gold often or currency, dollars, as they prefer. So it's very different, very mixed.
Yeah, I suppose the other thing that must be very different is your cost base. And whereas, I suppose if you think of the South African typical operation, it might be 50% labour, but and even if you think of a sort of global miner with an open pit, they're probably 50% oil or oil related, something like that. But presumably your cost base looks nothing like that.
Yeah, it's more like that of a factory. We're basically a refiner.
So does that mean when the gold price goes up, your costs don't go up 6 months later?
Yeah, indeed, that's absolutely right. And also because of the nature of our contracts and the fact that in many of the contracts we transfer metal back to the client, we're not as leveraged directly to the gold price either as what a typical gold producer would be. So it's a unique kind of a business.
So tell us a little bit, what is the strategy going forward?
The strategy going forward, and I'll step back a year if you don't mind. I mean, this time last year we were pretty distressed.
A year younger for one thing.
A year younger, but more importantly, we were very distressed because we had an issue with a refiner, and we had a massive backlog of material, and the backlog had worked its way through to stifling our cash flow, number one.
Now that's the Rand refinery, is it?
It is indeed, yeah. So it stifled our cash flow. It worked back to where our clients in Ghana, for example, refused to give us any more material because we hadn't paid them for the previous material, and we were in quite a lot of distress. And during the year, we found a refinery in Germany that could process all the material that the Rand refinery couldn't at the time. We also, that was a 5 month...
What was the problem with the Rand refinery?
They had a couple of things. They had operational problems with the furnace, we believe, and they also had some, the whole of South Africa, the mining industry, had some protracted labour issues. And they'd be one of the most reliable refiners in the world forever, kind of thing. And it just happened to be they had quite a few problems at the same time, which impacted upon us. And they couldn't foresee the knock-on effect that those issues would have for us. Because compared to the Anglo Gold Ashantis and the big gold producers of the world, we're a small client. Yeah. And we relied almost 100% on the Rand refinery. So we defined it as a kind of a single refiner risk. So we identified Arubis in Germany. We started shipping material there. There's a 5-month pipeline, so we were still cash constrained. So we then got a pre-financier to give us cash up front for the pipeline, and we got cash flow. We managed to pay the clients back, and then we got material back. So things started improving during the year. We also installed a new elution column, which upped our elution capacity from 1.5 tons a day to 8 tons a day. And with that and Arubis, we were able to deplete all that backlog stock during the year and increase our normal production from normal sources. So we went up significantly in our production and gold sold and transferred to just over 40,000 ounces. So that gets us to where we are now. We've got, we closed the year with £2 million of cash. We're profitable on both of our recovery operations. We have a plan in place to get Kilimapesa primary mine to profitability. And now, how do we go forward? So last year I said that we are positioned for a return to profitability. And my kind of strapline now is we position for growth and diversification. The growth, on the one hand, is going to come from Kilimapesa gold mine, where we're going to turn it from loss-making. We lost £711,000 this year to a profitable situation in the next financial year. And we're installing a new plant and a new tailings facility in order to do that. On the recovery side, the main area of growth will be in Ghana. And in Ghana, we operate in a free trade zone, and we have very favourable tax dispensation there. We've had zero tax up until December, and we go to an 8% tax rate. But we've got capacity there, and albeit that we're quite saturated in the Ghanaian context, we can very cost effectively import and source material elsewhere in the world, just about anywhere, and import it into Ghana to process there or to process there and send it on to South Africa. So that's where we plan to grow on the recovery side. And to that end, we're already sourcing material from the Sudan. We're getting material in Tanzania, and we've had a trial batch of material from Brazil. But we see South America as a big market for sourcing material into either South Africa or Ghana, but primarily Ghana. We've sent a sourcing manager down to South America who's now living down there. We've set up a relationship and are signing a contract with a local partner in South America, and we've employed an internal chap on a part-time basis to go and do all the corporate stuff, getting around legal issues, customs, taxation, that kind of thing. So we do plan to make a big foray into international markets to process material at our existing recovery operations.
Just very quickly, because I know we're running out of time, but is it possible that one day you might photocopy one of your plants in Ghana or South Africa and put it in South America?
It's possible. We're very naive with respect to South America, and it's not an easy environment to work in. So that may come down the track somewhere, but in the short to medium term, it'll be purely a matter of importing material to Ghana and South Africa from other markets, including South America. We think there's a business down there, but we're not going to put money in there and put capital in and try and build a plant before we really understand the business very well, and it'll take some time.
Absolutely. Well, very good luck to you.
Thank you very much.
And it shows in the share price as well, doesn't it? Which, it's up almost 3 times since a year ago.
It is, and it really has been because of the turnaround, I guess, and, continued good news and delivering on what we've said, and long may that last. I think, there's been bad news in between, but I think if shareholders continue to see good news and delivery upon our promises or our forecasts, hopefully we'll continue to go up with a fair wind from the gold price and exchange rates.
Well, best of luck.
Excellent. Yes, thank you very much for your time. We hope to have you back on the show again soon.
Thank you both very much.
You're watching Tip TV Finance. We're back after the break.